Yeah, here we go. Yeah, no, I can't complain. It's pretty good. Do you mean? So the kids will be off school soon, so it's going to be that'll be
Nice one.
interesting. Yeah,
Yeah, we're just starting to map out where we're going to go on holidays, trying to pick places, Portugal and Mallorca and all the rest.
very good. Yeah, no, well, in Europe you've got so much to choose from. Do you mean? It's great. Do you mean? And but no, Portugal's good. It's cheap as well, apparently. You know?
Yes, that's what I hear.
Yeah, a lot cheaper and good quality, and you get a lot of good seafood on that Atlantic coast and that. Do you mean? So,
Oh, nice.
yeah. So you have to check that out. And so that was an interesting article about Decred, though, eh?
Yeah,
I mean,
the podcasts.
Podcast, yeah.
They were, yeah, that was a good find on your part, and I've started listening more and more to that guy's stuff. But I just keep hearing governance coming up as a really, really big thing it's gonna make or break a lot of projects. So I think it's one to watch.
Yeah, because it's definitely difficult to get your head around, isn't it? Do you mean of sort of how it will affect everything in the future? But it does keep cropping up, doesn't it? Do you mean it looks like people who are very smart in the space sort of
For sure.
can see the benefits and the importance of it.
And I mean, when I listened into what Decred is doing, I can't help but feel that if Decred had been built first, where you've got this proof of work system where the miners basically provide the security level, but it's not the full story, the way that they've integrated the proof of stake, where it's actually the people who have skin in the game, and not just skin in the game, but you've got skin in the game that's locked up for about a month. So you can't just go and buy a stack of the tokens, short the price, and then dump your tokens, because it just doesn't work that way. Like, it's such a well-constructed consensus and governance mechanism that I can't help but feel that if Bitcoin had been that from day one, I don't think we'd have even a fraction of the altcoins, because it would just be so superior.
Yeah. No, it's really interesting, isn't it? Do you mean it's like definitely a contender? Can be a contender for the future. Do you mean? So
I agree. To be honest, I think Decred is the only project that I've seen that's going to compete with Bitcoin in the store of value category. I just haven't seen anything else that comes close to actually solving problems that could kill Bitcoin in the future.
Yeah. No, that's really interesting. Do you mean? So
totally
one to watch.
Totally under the radar too.
Yeah, exactly. Well, it's up there though, isn't it? I mean, it's like a good 30 in the 30s.
I think it's 32 or something.
But still a lot of people don't think about it. You mean?
Yeah.
So we'll see. So what are you?
Mav, welcome back.
Mav's there, is he?
Yes, I am. Good to be back.
How's Europe, man?
Oh my gosh, you guys spoiled me. It was fantastic. I'm definitely going back as soon as I can.
You fell in love with Europe, or
Oh yes, yeah. Italy and Switzerland specifically, but I had a great time. I went to Budapest. I went to Croatia. Spent some time in Nice and Monaco. It was a blast.
How was the Grand Prix?
It was good. I didn't realize I had the nosebleed tickets, so there wasn't much to see. But I mean, that's Monaco and the Grand Prix, I guess. But yeah, I'm sort of hooked. Even if I feel like the sport itself, or I don't know, it's just kind of in a lull right now while they wait for the what is that, the 2021 or whenever they start doing a little bit more fair across the board. But I don't know. For me, it was really cool because racing cars in the States is generally it's not associated with very good notions, I guess. We have this thing called NASCAR, and I don't know. It's I
want to go fast.
Yeah, go fast and go left. So it was just a very, very different I guess experience, but no, I had a great time. It was a much needed vacation or holiday, I suppose.
Well, us Europeans will be glad to see you back over here again. As we miss you this time, maybe we'll catch you on another trip when you visit some more places.
Yeah, absolutely. And both Checkmate and I went to the London meetup, and that was just fantastic. It was so much fun to just have impromptu sort of improv, or I don't know, ad hoc meeting like that, meetup where there's no purpose here other than just to have a beer and talk about the future of finance and technology. That sounds pretty fun to me.
We got about 30 odd people there, which is good.
Yeah, it was a really good turnout. I wasn't sure what to expect. I wasn't sure if we're gonna burn the place down or what, but no, it was a great time. I really appreciated having that moment, and definitely look forward to having future meetups like that as well. Well, cool. Yeah, let's kick this off. This is the inaugural OMNIA 3 Pillars chat, and I'm really excited to start putting this together, especially on a weekly basis for you guys, because I feel like the industry is moving so fast right now and in so many different directions that we do need to take some time to understand what's the pertinent news of the day, what are some projects that we should be focusing on, and just really have a very level discussion with you guys, and hopefully have some fun too. So I think loosely the agenda today is to use the weekend newsletter, which Checkmate is authored, as sort of the central topic, but we'll also dive into some of the news and relevant things, topics we need to talk about under the context of the 3 pillars, and then we'll finish up with some discussion and Q&A, and hopefully it should be a pretty engaging hour. But for those who've been a part of our STO call in the past, this is we try to keep things pretty freeform, and you can jump in with questions at any time. Just either, I believe you should have access to voice chat in this chat room. If you don't, let me know. But otherwise, just type them in if someone is being long-winded like myself into the OMNIA main chat, and we'll definitely address them and talk it through. But let's get things kicked off here. So Checkmate, fill us in just high level. What did you talk about yesterday? What is OPSEC as it relates to what are the implications? What were you trying to get at, basically?
Yeah, I mean, for me, the concept of OPSEC is something that people don't fully appreciate in this space, and it kind of extends to any time that you're online. I think if you're ever looking for somebody on Twitter who really pushes the right message, it's probably Matt Odell, who's Marty Bent's co-host on Rabbit Hole Recap. But he really pushes, and he's a hardcore Bitcoiner, and he really pushes the narrative of how you protect yourself in the future. And we've seen this recent FUD from India where supposedly it's going to be illegal to hold crypto and Bitcoin. There is no doubt in my mind we're going to see more and more countries outlaw ownership of crypto at some point, because it is a threat to the stability of a broken system. And you have to be careful, because there's both, let's call them the good guys, right? There's, at the end of the day, who's the people who are most disrupted by this technology? In general, it's governments and central bankers. But then you've also got, when you're in this space, people who want to get in your computer and steal what you've got. So there's a few really simple things that you can do to protect yourself. And the first one is just make yourself really, really hard to attack, so that somebody else is a lot easier and is an easier target. And for me, the easiest thing you do is you have to use a password manager. You've got to use something like for two-factor for everything, and you cannot use SIM text messages because they're so easy to SIM swap. There was a recent event on crypto Twitter. A few people got SIM swapped, and in fact, there was a bloke who worked for BitGo, right? One of the biggest crypto custodians in the space. He's one of their top executives, and his Coinbase account got hacked for something like a couple of hundred Bitcoin. simply because the bloke had his phone number tied to his Coinbase account rather than a legit two-factor thing. So you got to get a password manager. Got to use something. Some kind of YubiKey is definitely the way to go. Some kind of hardware two-factor, and just best practice of using a browser like Brave, which stops selling your data. Recently I've reset my Google advertising identifier, and previously you used to get ads. I feel like you'd talk about something and then suddenly you get served ads on it. When I go and search anything on Google, there is absolutely nothing that I could link back to my identity. None of my search history is getting leaked at the moment. And so I at least know that Brave is blocking most of that tracking and data trackers. So it's quite interesting. Most banking websites stop working when you've got Brave on because they're selling your data on everything that you do. So it breaks banks' websites, which is a bit of a pain, but this is the world we live in.
Yeah, I think it's, and I tried to stress this in the security class too. This sort of approach to security, both being cognizant of what's happening at the macro scale while also being very diligent and I don't know, making sure you're covering your bases at the micro scale. This is not some fringe, I'm suspecting that the government is watching me, I don't want to get on some list kind of thing. This is, in my opinion, just as important as literacy in this day and age. Being cognizant of your data and your security of your information, of your passwords and your personal information, all that sort of stuff. Yeah, it is just paramount to protect that, to back it up, to have multi-factor authentication and just lots of different ways. Security is a mindset. That's what I try to preach. It is trying to stay just one step ahead of anyone who would want to use that information, your account passwords, your crypto, whatever, to attack you or steal from you. And right, what Checkmate said, it's about being a deterrent. It's also about just having a blend between, I feel like, pure security and convenience. Having something that isn't totally obnoxious for you to use every time you're trying to log into something, while also being very protective. So I think the example Checkmate gave is a perfect example, because if you use a password manager that's also locked down by a physical YubiKey, which is, it's a physical authentication device, that is two-factor authentication made manifest, and no one is going to be able to break that without some serious effort. And I think that's the sort of approach that you need to employ, not only to protect your crypto, but also your data and your information and your identity. So I think OPSEC is incredibly important in this day and age. It is only going to be increasingly so in the future. And it's kind of frustrating to me how little it's talked about, or how fringe it's often seen as, when it really is a central aspect of why we do what we do in cryptocurrency, and what we're trying to push for in terms of ideals, and just getting people to be cognizant of their own data and how important that is. So anyways, don't want to ramble on. I often go on long tirades on these calls, but
that's all about.
Yeah. Go ahead, jump in.
Yeah. But I mean, like, it's one of those things that you don't realize how much of your data is getting leaked all the time until you pull out, until you opt out. And it is just so important. And even realizations like if you use a Ledger, right, a hardware wallet, when you use Ledger Live, you're using Ledger's Bitcoin nodes or crypto nodes. You are trusting that company, and you are also leaking your private information to that company because you're using their nodes. Every time you check a block explorer, you link your IP address to that wallet. And if somebody, and there's a lot of smart people out there, if somebody's tracking you because they know that you hold some kind of cryptocurrency, they can track your IP address, they can track your exchange wallet address, They can see where you're sending coins. They can see which exchange account you're on. They can then see what exchange accounts you're transferring off. Suddenly, they can link your identification, who you actually are, by a KYC account. They can link your wallets and how many coins you've got. And they can link it all back to your individual location, because if you're not using a VPN, your IP address is geolocated. So it's actually trivial for these tech-savvy people to track you down to your physical location, and you just have to be so careful. So using things like VPNs are just non-negotiable. You should be using it at all times, whether you're in the industry or not. And even things like sending coins only ever to a single address once. You should never send coins to the same address more than once. It's a bit hard with Ethereum, and it's one of my biggest gripes with Ethereum is that the whole system is constructed as an account, like a bank account, whereas Bitcoin, every single transaction will set up a new address. You can generate an infinite number of addresses from your seed phrase. So, that is one of the huge benefits of UTXO chains, in my opinion, is that you do have that that system. So you're asking the Ledger S or the Ledger X if you tend to hold Bitcoin only. To be honest, I recently bought myself a Nano X, and if you are only holding one or two crypto coins, go the Nano S. For me, it just the feel of that little thing is it's so raw. And it's such a good little unit. I really enjoy using the S, and the X, even though it's got Bluetooth, can't be used with anything except mobile yet. So it can't be used with your laptop, which is actually what I got it for. So that's a bit of a pain. I'm sure they'll fix that in the future. But if you're only holding one or two coins, go the Nano S for sure.
Yeah, and I just I think it will be beneficial for everyone if I just do like a very abbreviated version of the security class and some of the recommendations I made, because it's all pertinent, and like as it relates to what hardware wallet you're using or whatever. It is all about personal feel. It's all about making sure that you employ a security mindset that you're actually going to use. If you start to take shortcuts on this stuff, if you start to get lazy, if you start to not, double check things, and that's when you get exploited. That's when you get pwned, basically, is because, you let your security lapse. So you want to make sure that you employ a system that you can utilize every day, and it's not too burdensome for you to do so. That's why I was saying earlier, you want to find a blend between absolute security and absolute convenience. But yeah, basically, just to run through some of the stuff that I just linked in the chat, and for those who are listening to the recording, just search for Wirecutter, like security or password managers. But basically, it's all about securing your accounts through two-factor authentication and a password manager like LastPass. It's all about keeping your devices up to date. So be that your Ledger Nano S and making sure that you have the latest firmware, to making sure that your phone is up to date, all that sort of stuff, because exploits happen typically on older software and older hardware. So you just want to make sure that you're always running the latest OS or whatever. You want to make sure that you're protecting your web browsing. That's through a VPN. I use private internet access. I think it costs like $60 per 2 years. It's been great. I've really enjoyed what they do, but there's other choices like Nord. You can install browser extensions such as, well, I guess uBlock Origin doesn't work anymore because Chrome just went, really stupid. They disabled all ad blockers. So thankfully, like browsers like Brave are not employing that, even though they are utilizing the Google Chrome like code base. So that's good to hear. I'm glad to see that Brave is sticking to the morals and the vision. Also use a browser extension like HTTPS everywhere to make sure that you are always automatically directed to the secure version of a site when it supports it. I would highly recommend bookmarking a lot of the websites that you visit very frequently, such as Coinbase.com. Make sure that you're bookmarking that, because what a lot of the phishing attempts will often be is just a slightly altered version of a URL or something like that. So if you search for something, and unfortunately Google's just not been very good about this, if you search for Coinbase in Google, one of the top results might be a fake website that's set up to emulate that website that you're searching for, and it might just have like a a Spanish character or something like that as the E or something like that. It's something very subtle that you won't notice until it's probably too late. So just make sure that you're browsing in a way that is cognizant of the fact that there is literally infinite ways to attack you and take advantage of your lapse of attention, I guess. Also, I would maybe recommend antivirus or just making sure that you're utilizing some sort of security protocol, lock down your phone, and use encryption on your laptop. That is pretty much the whole security class in a nutshell, and that's some of the recommendations I made. So this is a really important topic, and I'm glad we're having this conversation, because this is something that needs to be shouted from the rooftops, but it's often kept very quiet. So again, don't want to go too long here, but hopefully you guys are getting some value out of this. Chickmate, is there any other recommendations you would make to people who?
Sorry, I thought my mic was on then. I was just talking to myself.
It's okay.
Yeah, I mean, privacy and anonymity is, it should be a right. Everybody has a right to be anonymous and to be private in what they do. I think that's why privacy coins have a use case now. I think they're going to struggle when Bitcoin becomes fungible. But this, as much stick as people may give Bitfinex, this is why Bitfinex has such a huge following. This is why Tether doesn't break the market, and this is why the Leo token is probably going to leave BNB for dead this year, because Bitfinex has always supported the anonymity of Bitcoin. Right? They've always operated an exchange that you do not need to do KYC on. Tether exists because it gives people a stable coin without the likes of USDC following them and Coinbase following them. It's a really hard business to operate in, trying to run an exchange that interacts with the fiat system, but also enables anonymity. So there's a podcast recently that Pete McCormack did with Phil Potter, who worked for Bitfinex for many years. Highly worth listening to. And the last time that they created a token like this, like Leo, they basically they performed every single action that they said they were going to do. They paid back all of their stakeholders, and a lot of the people who held that token, even after the hack, basically ended up with Bitfinex equity. So, they're an interesting company, and I'm growing increasingly curious. So, one of the bits of research I'm going to be doing is into the Leo token, a little bit into Bitfinex and Tether, because there's so many sides to that story. But you need to remember that these guys are trying to build something that really does fit the ethos of what Bitcoin and data privacy and opting out is all about. So, yeah, it's that's an interesting little case study. I'm looking forward to delving deeper into that one.
That's pretty interesting. I have a very, I guess, jaded opinion on Bitfinex and Tether and how they operate their business. I try to steer people away from them and their shady business practices. But at the same time, I agree that they are an interesting case of how they operate and what they're aiming to achieve, I suppose. So yeah, I look forward to having a future discussion on that.
Yeah, look, it's one of those things that you look at the exchange space is a really, really complex one in this industry, because nothing is black and white. People ask about people view Binance in a different light to the things that like BitConnects or Bitfinex, and the reality is they're both operating in a very similar landscape. The difference with Binance, and the reason that Binance can do what it does so openly and so in your face is because they do not touch the fiat system. And it's just a whole different ball game once you start touching that space, because the suddenly regulations become a very, very real thing. So it's all a gray area, and we got to keep our eye on both of these perspectives and how it all comes together, because there's no question that Binance is also playing some silly bugger games, and how long it can keep going for is anyone's guess. But eventually something's gonna crack, and it's either going to be the regulators or it's going to be the exchanges.
With the Binance, the Bitfinex Tether issue, what sort of percentage do you think it could go horribly wrong? Because I listen to a lot of podcasts, and a lot of people, when they're asked about it, sort of seem to think it could go really nasty.
That's the general. So basically, my view is that similar to Binance, they are both ticking time bombs. There is no question that they cannot continue to operate the way that they do without some repercussions at some point in the future. I think the real question mark in everybody's mind is, how far in the future are we talking about? How quickly is it going to happen? And how much money can people make in between now and then? Right. So it really is the last person holding the token loses. And this is why I'm super critical of the BNB chart that just keeps going up, because if you go on Twitter, there's a good portion of people who go, okay, not touching that, and then there's a whole bunch of other people who go, best investment of all time. There's nothing that can go wrong, and it's just that mindset where you have to be ready to get out, and when the news happens, you are not going to be sitting at your computer. You're not going to be able to get out fast enough. And there's so many charts out there that are literally just a vertical cliff that took all of 15 seconds to wipe out billions of dollars of value. And, we're going to see more and more of these, because what are we up to, like 5,000 cryptocurrencies on CoinMarketCap, and there's space for about 6. So there's going to be a few heavy red candles one day.
Yeah, no, I think you're right. Do you mean? I think both are ticking time bombs. Do you mean?
It is interesting because basically Binance is the ultimate shitcoin casino, and Bitfinex is the only major exchange that preserves anonymity. So it's a delicate mix. Even Binance blocks people's accounts now when they try to do a non-KYC account. So it's becoming increasingly difficult not to leak your personal information, which it's kind of one of those characteristics of Bitcoin. It's that pseudonymous space, and it's not necessarily because you're doing anything wrong. It's just simply because you want to preserve your privacy, and I think that privacy is completely undervalued in society, because it's so profitable for companies not to preserve yours. So it's a delicate situation.
Because also they're all saying that, because the tether sort of brings so much liquidity to the market, it could be a massive, massive shitstorm when that sort of does happen. Do you mean?
Sure.
And, leave a lot of things without a lot of liquidity, and could change the market a lot.
Yeah, absolutely. And I mean, if you think about it, if Binance went down, think about how many coins go down with it, right? If Binance goes down, you probably wipe out about a third of the industry.
Yeah, for sure. Yeah, all the good ones. Well,
yeah, lots of malinvestments going to go out the window. There's going to be a day when the regulators go, yep. It could be after this whole Kin thing. When Kin, unlikely to succeed in their crazy venture, but if they were to ever get shot down by the SEC, I wouldn't be holding an ICO token on that day, because it's just going to be bad news.
Yeah, for sure.
I'm placing the odds of that eventuality as around 99.9%. It's
they've got no chance, right?
Yeah, I think it's more of a symbolic. Well, they're trying to paint it as a symbolic fight. That's it's the Defend Crypto Fund. No, it's the Defend Ken's Legal Fees Fund. But it is an important conversation, I suppose, to I guess garner interest about, can we look at these existing regulations and, under the context and the framework of a new asset class, a digital asset, are they still relevant? And asking that question repeatedly and pointedly, hopefully not inside of a courtroom, but it is a conversation worth having. I think that's one of the I'm glad that it's garnering some conversation. I don't believe that Ken has much of a fighting chance, but I think this is sort of the transition, or it's indicative of the state of the industry right now, is that we're fighting what seems like a losing battle, but what really is happening here is that the paradigms are changing so fast that the regulations can't keep up. So it is sort of frustrating to see, or be a part of, but at the same time, we understand that if you're looking for a more pure or more equitable form of capital formation, that's why we've been so intent on looking at the future of STOs. Have they evolved as fast as we want? No, but that's actually a good thing. I think we need something that works, that is clearly trustable and built with this sort of intent in mind. And that's just not something I saw with the ICO. So I'm glad that that's the directionality of things, even if it is frustrating in the interim to sort of be in this perpetual holding pattern. But yeah, I think where we are right now and what battles we're fighting, it's somewhat about purpose, but it's also about trying to uplift at the same time. So yeah.
Did you happen to see that Coinbase is now supporting holding BCAP tokens
and securitizes DS tokens? Yeah.
Interesting.
Well, it's Coinbase custody, but yeah, it's that's I think that is interesting. I think that is somewhat starting to show that there is I just read through Tokeny put out here, I'll link it, a pretty good little article on sort of the missing blocks of the STO space right now. And there was also a Deloitte.
I thought you were going to say Ripple then.
What's that?
I thought you were going to say the missing blocks of Ripple.
Oh, yeah. Oh boy, I don't want to play with fire there. I got burnt last time. But yeah, it's both the Deloitte report and the Tokeny article sort of highlighted that there is sort of this, I don't know, it's not a lack of something. It's just a sense that there's these disparate pieces and they just need to be connected together, and we'll have something that is very special or very transformative. But yeah, you can't have a tokenization process and not have liquidity. You can have like a secondary market and not have the technology to back it up. It's we're definitely still very far away from seeing that come to fruition. But I think that's more of an opportunity than a challenge. So I see that with very longing eyes, I suppose. But yeah, maybe that's a larger conversation about where we are as an industry is trying to still break through in some ways, fighting for relevance. I don't know. It is encouraging, I feel, to see what was it, of course Facebook coin and sort of Bitcoin had its 14-month high of trading on Coinbase in May. There's signs of life in this industry, or outside of the industry, but reflecting well on this industry. And yeah, I think the future is still extremely bright. I think there's a lot of potential. And you okay?
Yeah.
I don't know where it's going though.
Yeah, look, what I'm seeing is, and to be honest, I still feel like the most important asset in this entire industry is Bitcoin, simply because you got to look at how much financial infrastructure is being built for this thing. It's just insane. Lightning Network is just the start. The number of custody solutions that are getting built. There is no question that Bitcoin is being built by some of the smartest people in the world in the financial side, right? So, I think Ethereum's DeFi is very exciting for the Ethereum internal world. But what the difference with Bitcoin is that it's being built for the institutional level external, right? So, and all this financial infrastructure is going to build that. I mean, Bitcoin is going to be around for 20 years at some point, right? At some point, we're going to get to that time where it's been around for 20 years and the world just accepts that, wow, this thing is just not going away. It will have gone through another 2 hype cycles by then. The thing will be worth $500,000. And there's going to come a point where people just can't not look at it anymore, right? They can't put their head in the sand any longer. And it's going to reach this point of just acceptance. And when that time comes, it's going to be off the back of things like security tokens that have reached maturity. It's going to be off the back of things like, Ethereum, if it survives, right, if it keeps doing what it's doing, things like decentralized finance are most likely to be common applications, and it'll probably be offered by institutions. So there's no reason to think that this is going to just back off. It's the industry is extremely healthy, and when you look at the financialization of Bitcoin, it shows you that there's money, investment, and mind and willpower being built behind this industry. It's not going away because, first of all, it can't, and second of all, there's just so much demand for it, and yet we're still at the bottom of the S curve. So it's going to be a very, very long but a very, very steep ride up, I think.
There's something that's been going in my head the last week. Do you know what I mean? Like, I keep asking myself, is the bull run really, just around the corner? Or are we sort of, finally going to be taking off? And I don't know if you read that article recently about someone read about are the institutions about to step in, but they were saying that they're actually waiting for the retail to take off first before the actual institutions get in, and then just going back to sort of like the way where the world economy is heading at the moment, with like Australia just lowering their interest rates, talking about lowering their interest rates. Do you know what I mean? Of like, we're, more and more signs daily are just, pointing that we're heading for a recession. Do you mean a huge recession? And like, and like, then you look at 2017 which kicked off the ICO, but at the same time, people had a lot of extra cash then. Do you know what I mean? And like, if people are tightening their belts now and haven't got so much, they're not going to be taking so much risk. Is the retail going to be there to sort of like kick off the bull market? Do you mean? I mean, I think Bitcoin personally in the next crisis is what's going to make Bitcoin. Do you know what I mean? I think it's going to be through the roof and beyond our wildest dreams. But I don't think the rest of the market's going to follow. You know what I mean?
100% agree with that. Because why would you, in a system that is just broken by inflation, why would you ever buy an asset with no hard cap?
Yeah.
When people lose their jobs, they're not going to be hanging on to their EOS. They're not going to be hanging on to their Ripple. They're not going to be hanging on to anything except something that has a serious hard cap and is genuinely performing. And the institutions will jump on board much, much faster when they realize that gold is just not cutting it and everything else is getting whacked, right? If Bitcoin is the only asset that's going up, it will financialize overnight.
Yeah. And then, and then there's another article I was reading about the bail-ins, of like, so you imagine the scenario, right? That we're having a massive crisis. Do you know what I mean? The world's sort of going downhill and everyone realizes that, hang on, this is going to be a really, really nasty one. And then you've got the bail-ins. Someone was talking about, like in Australia in 2012, they made new rules that if the banks, if they go into debt by 20 billion or trillion or whatever, I can't remember now actually, but they were saying that they've got an escape clause that they don't have to guarantee, at the time they guaranteed like $250,000 or something, but they don't have to if that bank's in debt by 20 billion or trillion.
The bail-in laws.
Yeah, exactly. And they can also, but it does not just that bank. They can use any of their subsidiaries as well, being in that debt as well. And once one does, they'll just trigger all the rest of them to hit the green light that nobody's money's safe. So where they're all going to go? They're all going to go to Bitcoin. Do you mean? I mean, it will be massive. Do you mean? I think everyone will be, so many of the rich people will be hedging towards Bitcoin. You wouldn't trust any banks whatsoever when the next big crisis hits. Do you mean? So I think it's going to be the making. The next crisis will be the making of Bitcoin, but I'm not sure about much else.
If you ever get the chance to listen to any of Dan Held, who goes by the name Dan Heddle on Twitter, but he's done a number of podcasts on most of the big presenters. He is insane at talking through this exact scenario and why Bitcoin is going to be just fine.
So what's his name?
Dan Held. But I think HELD is in like held.
Okay. Yeah.
But his Twitter handle is Heddle. I'm taking the piss of Hoddle. But he's really good. He understands Bitcoin security to a very high extent. And what he keeps saying is there's going to come a time, probably in the near future, where the narrative behind Bitcoin becomes so incredibly simple and easy for the general population to digest and understand why it has value, that Warren Buffett will be filling his bags, because it will just become so simple and so obvious. And I think you just described probably let's face it, the scenario that Bitcoin was designed for, right? This is what it was built for. This is why it was originally released, is to solve the problem that happened in 2008. And what 2008 did is it didn't fix anything, If you want to see what happened in 2008, watch The Big Short, where at the end of the film they say, oh yeah, everyone went to jail and there was big fines and there was big remediations. And it goes, jokes, no. Actually, one guy went to jail and the rest of it just kicked on exactly as it was. And we're still running that experiment, right? Travis Kling does a good job talking about this as well. It's crazy.
Yeah, because also, we're just seeing it on a very small scale in like, Venezuela, even China, that, was it Adamant, Tamir,
Adamant Capital.
Yeah, they brought out an article recently saying that maybe the last pump from 6,000 was up to 9 grand was from the Chinese hedging against their currency
risk.
Yeah, and it's
one Satoshi is worth more than, I think it's about 3 countries now where a Satoshi is worth more than their national currency.
Yeah, we've seen it on a small scale, but you wait till it's a big scale. That's just going to drive it through the roof, I think, and then FOMO and people hedging towards that will just drive it to an insane price, I think. Do you know?
Yeah, no, I think the narrative is going to get very, very clear, and I think there's only so long that people can ignore this thing before it just can't ignore it anymore.
Yeah, it's going to be. I think it's going to be happening quick, and that the crisis will drive Bitcoin through the roof.
Well,
the next year, 2 years.
It thrives in adverse. It was designed to thrive in the most adverse conditions when it comes to financial settings. So it's just what it was born for.
Well, you think as well, as soon as that, say, general public start hedging, and try and protect their money by putting into Bitcoin rather than trusting banks and stuff like that, and then you imagine the institutions, for the non-correlated assets. Do you mean it will just be a free-for-all piling? It's just I can't see it not being. Do you mean really?
Yeah.
Yeah, I think what this industry represents and why we sort of stand in this spot of opportunity is not only our adaptability, but we've shown over and over again that what doesn't kill you makes you stronger. I look at the examples of like Komodo using Bitcoin's more reliable security as a backstop against their altcoins' native inherent security, or like as much as I don't like Florin, they're using some sort of automated algorithm to buy more hash power if they detect like a offset an attacker. I don't know. I think this space is so representative of, just in a world where we have automation and AI and blockchain and a lot of other emerging technologies coming onto the scene, competing against this sort of these notions and these systems that are just inherently stuck in the past. I mean, look at GDP, for example. That is inherently an industrial age metric of how to measure productivity, and I think it completely ignores a lot of what goes on in the digital age. I think we're standing at the precipice of some major conflicts and just things that have to be brought up and evolve or get broken down. But a lot is going to happen, I think, in the span of our lifetimes that is transformative. And it's the technology, it's the space, it's the ethos of adaptability and innovation that will ultimately succeed and survive. I think that's where we are right now. Is we're sort of in this just microcosm of trying things out and experimenting, and so long as we never lose that, that is why Bitcoin and this space has permanence to me.
Yeah, it's going to be an interesting few years, and I think that's my thesis in this space is certainly looking at the macro economy, what's going on around this system, and it really does when you look at it like that. And this is why I'm extremely critical of the shitcoin casino, particularly now, because you're totally right that people are not going to take risk when their livelihood is at stake, right? People are going to sell their Bitcoin before they sell their house, and they're going to sell their EOS before they sell their Bitcoin. And, it goes down the stack. People are going to get out of risk assets, which is what a recession is, right? That's why stocks just go down, because sure, people may want to keep their Apple stock, but if it's going down and you've got bills to pay, then what choice do you have? So you've got to keep this macro environment in your mind. And I still stand by, this is why the consolidation to quality is so important, and why limiting your risk in the casino is a good move, at least in the early stages. And what we're seeing in the market at the moment, the crypto market, is we've got basically two different charts that I'm seeing, at least. Aside from Bitcoin, I think Bitcoin's just doing its own thing. But when Bitcoin's strong, you've got some coins that are being sold off en masse and their US dollar value is actually dropping. And you've got some coins which for every Satoshi for every dollar that Bitcoin goes up, the altcoin is going down an equal amount of Satoshi. So it's actually holding its US dollar value. So you've got altcoins that are either holding their value or being sold off. And the market right now is telling us which projects are going to be around more than likely in the future. Because if the coin is performing and people are not dumping it for US dollars, they're just getting into Bitcoin for the edge. Whereas other coins they're just getting out of because it's a risk-off asset. The market's telling you what to do, and there's very, very few coins that are falling into that latter category of holding their value as Bitcoin goes on its tear. So I think there's a lot of charts there that you should be watching and seeing where those correlations are, because it will help you consolidate to those coins that have at least a chance of surviving on a macro scale.
Yeah, I think where the space is right now and how to look at things, it is important to understand, certain events that might be going on. Certainly we're looking forward to the Bitcoin halving in a year or less, and maybe the Litecoin halving in about 2 months or so. But yeah, I think it's also, you have to be cognizant of the overall trends of things, and what has remained true throughout the last 10 years is the dominance and position of Bitcoin, and the relevance of something that has sort of permanence in a digital sense. I think that's what Bitcoin shows over and over again, is that there's this ongoing conversation and really argument about forks, for example. Should we fork Bitcoin and try to update its consensus mechanism or make it faster or whatever? But I think that conversation quickly defeats itself by its own logic. Then we should just always upgrade everything all the time, never stick to any one consistent method or technology, whatever. Yes, I think in some cases we have to look at things that may be outdated in terms of methodologies or technologies or whatever. But Bitcoin's value, its value is its ability to hold value and serve as that agent of that network value, and to have things built upon it. And that to me, that is what it represents. And I have yet to see anything else sort of represent that in a digital sense like Bitcoin. I don't know. It's very interesting to see where the space is right now as it tries to expand in these other avenues. Why we talk about the 3 pillars. But at the end of the day, it is still an experiment in motion of where we aim to take things, how we aim to look at the notions of what economic forces are and how we can build a more efficient system. And at the end of the day, that hasn't changed over the last 10 years. So it's definitely cool to be a part of. I'm still very glad to be a part of this industry, and very excited for the future that is afforded to us, because ultimately the future belongs to those willing to challenge the norms and look to see what could be better. How can we challenge the way things are done? How could we build a better system? That to me is what this space represents.
You give Justin Sun lunch with Warren Buffett, right? It's the way forward.
Yeah, what was that? I heard if you send Justin Sun one Warren Buffett dinner, he'll send you 5 back.
That's just mad, right? I mean, does anybody have concerns about what he's doing with all that money? I mean, he's not building anything with it, right? He's having a lot of parties and he's buying lunches, and he's a true banker.
Yeah, he had some nice clothes. I saw him in person at Consensus. So he's okay, but whatever. I think there's always going to be people like that, and guys, organizations and whatever that aim to build out their own little cult of personality. But at the end of the day, the technology is what's important, and the sort of morals and ethos that we build here, that is what we should uphold. And I hope that they have a good lunch with Warren. I don't think they're going to change his mind, at least publicly like that.
He might come out a Tron maximalist. Who knows?
Oh man, that
would be a blow.
We already live in strange times. I don't know if it could get that much stranger, but yeah, I guess that's you guess. I guess you have to be ready for anything. So yeah, I suppose we'll chalk that one up as a possibility, however remote. Hopefully.
Yeah. There's a question here in the chat. An article shared about buying STOs using Securitize. Is that US restricted as well? I would expect that it probably is, because I think that's all going to be governed by the US securities laws. Mav, you probably have a thought on that, but does Securitize also follow the same restrictions as Open Finance, as having a Coinbase help? I would expect that it probably is very similar to what we've seen on Open Finance. Mav, you got any thoughts?
Yes, it absolutely is. Unfortunately, as much as I would like to get in on Securitize and the rest of the Spice VC SAC, it's they have to play by those rules, because that is that's unfortunately the state of the STO industry, and hopefully things will change sooner rather than later. But it definitely is frustrating. I get it.
Do you know if there's actually some momentum on getting these things changed at a regulatory level? Is that too optimistic?
Well, in part, that is what the argument of the Ken versus SEC legal battle is. The SEC doesn't have the I guess jurisprudence to change something as far-reaching like that. I think what we really have to do is look at this from a legislative perspective and say, what can we bring to Congress? What arguments can we make to Congress to consider updating or having a separate, I don't know, categorization of how we define digital assets? Because yeah, it's 2,000 or 5,000 today, but this is just the start. I think this is we're quickly going to find that things get away from us, at least in the States, both in terms of regulatory, I don't know, I can't even think of the word. Like we want to make sure that we're not left behind by the rest of the world, both in terms of development, but also the regulatory ecosystem, the fostering of this economic powerhouse that is or will be cryptocurrencies and decentralized finance and a lot of these other notions that we're starting to play with right now. But they will be fully fledged things sooner rather than later. So yeah, I think there is a lot we need to consider and suggest alternatives on, and it's important that we don't come at this like spoiled children and say, this is not fair. I will. The rules don't apply to me. I demand to be taken given exemption. No, I think what we have to do is look at this and be cognizant of, even in the history of crypto, we've shown the need for at least some investor protections in place. I think we have to recognize and acknowledge and feel somewhat bad about the ICO and how many people got burned on that. Yes, it is their own fault eventually, but at the same time, that was a wild west of regulatory non-concern. It was more about how much can we raise and how much can we light on fire and that sort of stuff. So I think there does need to be some sense of a balance, but I think we are starting to enter some interesting territory where do these conventions, these notions, the idea of sovereign nations governance impacting the ability to be free to invest in what you want. I don't know. These are much bigger, broader questions of what we're starting to challenge here. But I think for the foreseeable future, we gotta play it nice and play by the rules, and eventually we can break off and become something greater, bigger, or whatever. But for now, I think we have to be we have to play by the rules in some sense. I don't know. It's a frustrating sort of catch-22 to be a part of, for sure.
Yeah, I hope they get there. I'm sure they will. Because you hear the argument that a lot of, first of all, it will leave a lot of Americans behind in terms of financial opportunities, and second of all, I think a lot of innovation will move overseas, or is just being built overseas, where there's more ability to be a bit of a testing ground and try these different models.
Yeah, it is somewhat valid to argue that let the other countries go first, be guinea pigs, test the different models, and then we'll come along, we'll do what Apple does, and just perfect it, make it as perfect as can be. There's some I guess that is a germane argument, but at the same time, I think the world is going to be moving much faster than that. So by the time we have our perfect laws in place and we've updated the regulations and things are just great, something else has come along that will challenge the status quo and the paradigms. And I think we're going to find that what's already getting kicked off is this just rapid innovation, just on top of itself, like over and over and over again, and just rapid iteration, rapid evolution of concepts, of technologies. This is where I think a lot of our society is being heading towards as we become increasingly digital and increasingly living in a world of automation and AI and a lot of these other emerging technologies right now. It's both terrifying, but also very exciting to be a part of. I think there's many different ways that the future can shake out, and it's it's a little bit intimidating, but it's also exciting to stand at the crossroads of so many different paths.
Yeah, for sure. Are there any, that's what I got. Right. Are there any other questions from the floor? I think we're coming up to the hour, but if there's any other questions or thoughts that people have, while you're all thinking, so this Wednesday I'll be doing the second episode of the on-chain masterclass. So that one's going to be looking at scarcity modeling. So picking up some of the work that Plan B on Twitter has built some pretty impressive mathematical models. I love how simple they are, but basically it looks at the monetary policy of Bitcoin and then structures out a fairly accurate, in fact, surprisingly accurate model for where the actual stock to flow pricing would put Bitcoin in the future. And what blows me away about this analysis is that if you took the first 4 years of Bitcoin stock to flow information and you didn't and you mapped out with it even before the halving, you would have been able to predict the capitulation level of every single bear market to date, which is pretty spectacular. The way that the data matches up with after the fact is quite impressive. So that should be pretty enjoyable. That'll be 7 p.m. on London time on Wednesday. So there'll be an email coming out in the short term, and I'll get the production quality a bit better than the previous one, and we'll get them uploaded to that one and the Realize Cap to the masterclass page in due course.
Looking forward to that one. Can't wait.
Yeah, Checkmate has been doing some really awesome work, just trying to give people some really poignant information and topics about Bitcoin and the larger conversations to be had. I think, yeah, I'm as excited as you are for that one. So good luck.
Well, I'm getting the Checkmate virus. Do you mean I'm becoming more of a maximalist all the time? Do you mean it's like I've gone from like a shit altcoin frenzy to sort of like a maximalist for that, thanks to Checkmate. Do you mean it's quite good? I think I'm probably going in the right. Do you mean?
It's funny. I sleep much better at night when I've done the research. I understand what I'm in for. I've gone through the shitcoin casino. It really sucked, and I don't know. Once you start getting your thesis down and you understand what this space is about, and when you need a blockchain, you realize that you don't need it for most of the use cases that are being pitched, and it just helps you sleep.
But also some of the market caps of these things are huge. Do you mean you're just thinking, some of it doesn't make sense, but to Bitcoin it does make sense.
Yeah.
Do you know what I mean? It's like that's the crazy thing. Some of these other ones are just like, what do you mean? And like, personally, I'm really into like just Bitcoin, Decred, Nano, and Link. Do you mean that's about it?
Yeah.
Really in my top 4.
I met Sergey at Consensus, and it was not exactly the best conversation I've ever had. Guys like him and Charlie Lee are a little bit hard to talk to, but just brilliant, absolutely brilliant guy. I'm very excited to see what they are doing with just a lot of the things that they're coming out with right now. I think there's a lot of interesting projects out there, and that's one of my focuses right now is trying to better chart some of the upcoming opportunities, or at least to give you some warnings about if we truly are going to help you get clean of your shitcoin addiction. I guess we are shitcoin rehab, but that's okay.
Good. Good stuff.
Yeah, I think just to close this out, because I got to run. There was a comment at the last, or it was one before. We just had an informal discussion, and basically the community portfolio, Mav. It's a bit of a task for you and I. One of them was basically so we've kind of got the average snapshot of our members about where the kind of allocations would sit. We have to go through that and basically distill, in our experience, where we think the premium projects are. You know, 1 or 2 privacy coins, 1 or 2 stores of value, the real winners, and start actually tracking those. And basically, it was every 3 months we'd come back and do a revisit and see how they've actually performed. How did our thesis actually play out? So, kind of taking all that community data and just distilling it into, okay, let's take this information, let's apply it to a premium set of projects, even if it's just in theory, and track these things over time.
I think that'd be a great thing to do. Do you mean? I think it'd be awesome for everyone.
Yeah, that's definitely where I'm excited to start really looking where we can do some comparison analysis and, you know, further areas of research and, you know, reporting for you guys, because this stuff, we do take it very seriously. We want to make sure that we're giving you the best information and suggestions and, you know, just the best that we can possibly give you. So yeah, I'm really excited for you know, giving that to you and you know, working together to make it happen. So, you know, want to make sure if you have any comments or suggestions, please let us know, because, you know, it is a community portfolio. So we do want to incorporate community feedback as much as possible. Good
stuff. Well, thanks for your time, guys. Hope you have a good week. And Mav, welcome back.
Good to be back, and thank you so much for your time, guys. We really appreciate you coming on here, and yeah, it's going to be some exciting months ahead for us. I think we're working on a lot of really cool things right now. So thank you for being a part of it.
Thanks, guys.
Good stuff, guys.
All right, cheers.
Thanks.
Cheers. Bye.